GetCrack. Wake up, motherfucker.
On March 2nd, President Trump announced a proposal for a U.S. digital asset stockpile that would include, besides Bitcoin, Ethereum and Solana. Now, the inclusion of Bitcoin is obvious in that it's the biggest and most deeply rooted cryptocurrency, currently accounting for 60% of the total crypto market cap. So why include the other coins? Well, despite their lack of market cap, many crypto enthusiasts believe that Ethereum and Solana have some specific advantages in design over Bitcoin. Ethereum is praised for its network and, more specifically, its smart contract capabilities. Solana has some similar characteristics as Ethereum, but its network is believed to have far greater transaction processing speeds than any other coin. Perhaps the speed is the primary reason for Solana's meteoric 1,500% rally from the fall of 2023 to its high in January of 2025. For reference there, Bitcoin rallied an impressive 300% in the same period, and Ethereum almost 160%. Nice moves to be sure, but obviously dwarfed by the move in Solana. Now, as adoption of Solana grows, so has trading vehicles designed for hedging risk and speculation. The CME Group's new Solana futures contract is a perfect example. The market's belief is that any step forward in the ability to hedge risk is an important step forward in validating the coin and the technology it brings to the arena.
About Solana, it's not a crypto that gets a ton of attention, but it's down about 35% so far this year. In terms of the underlying technology, Leah, how would you describe institutional adoption of that technology?
Yeah, it's a great question, and actually exciting since Sol futures were actually started trading yesterday on the CME. And they actually had a very interesting and good debut, I would say. In the end of the day, we need to see each altcoin launch as different. Each of these alternative currencies are different from one another. I think what's been interesting over this time period is seeing Bitcoin become what's seen as a store of value asset, played as such, invested in that asset as such, with a longer time horizon when the volatility has been muted. Whereas these alternative currencies, investors are still trying to make that differentiation between Bitcoin or Ethereum, Solana, XRP, etc. So I think that Solana has proved itself that it is a very interesting alternative currency and blockchain with very much immense staying power due to its ability to handle transactions per second in a sub-second environment, interoperability, and a lot of other advances. So I think that institutions are taking it very seriously. Again, we've seen Sol ETF applications already in. You've seen Sol futures ETFs as well.
Yeah, to that end, that's exactly where I was going to go next, the ETF. I know that you've kind of hitched your wagon to Solana here. It's Sol Strategies, isn't it? But if you had to make an educated guess on the types of ETFs that you might see next approved by the Securities and Exchange Commission, do you think it's Solana or something else? And depending on who it is first, what kind of new interest do you think it might bring to the ETF community that may not even really know about these assets?
It's a great question. And it's interesting because if we look towards historicity, you know, when we launched our Bitcoin ETFs and especially Bitcoin futures ETF at Valkyrie in October 2021, it was very much because Chairman Gensler had specifically said 1940 Act vehicle with CME traded Bitcoin futures, which had already established that it had price discovery in a positive market. And was a robust market enough. Now we have a completely different administration that is very pro-crypto, and I think it's very much to be determined on what type of structure they want to see that ETF in. But now you have Sol futures that have already been trading, and I think that that's already proving itself to be a robust market, and that's just day one trading or day two today. So in regards to when will those Sol ETFs come out, I'm obviously not sure. I can't speak on behalf of the regulators, but of course we have a much more pro-regulatory environment. So I think that we will see that as the next evolution. But the second part of your questions is very interesting to me. the question, I think, comes down to how do investors differentiate between Bitcoin, Ethereum, and the other alternative currencies, and when and how will they see that Solana is, let's say, potentially a superior blockchain, whereby a more interesting and stable speculative investment. I think that takes time, that takes education, that also takes regulatory information and guidance, and we're still getting there. But that's not a bad thing. That provides that opportunity for us, boots on the ground, talking to registered investment advisors and other allocators to get there for that educational piece.
Look, it looks like an upside surprise. What do you see, and what were we expecting from this company?
Yeah, I think what we're seeing from the company is a beat both at the top line and the bottom line. And as you alluded to, I mean, this is a company that not only is coming off a really incredible year, but is adding to the momentum with real, tangible progress on product and innovation, maybe of the sort you would have expected to see from a company like Tesla years ago. You're seeing that from the Chinese now. And I think, with BYD's announcement last week of 400 kilometers worth of charge in 5 minutes, with Xiaomi really gaining momentum in China, and they're out today with plans to raise more than $5 billion to fuel their EV expansion. You're just seeing the Chinese competition for Tesla just sort of going from strength to strength here. And we're seeing in these BYD numbers actually, them retaking a lead over Tesla in terms of annual revenue. So just real strong numbers out of China, of the companies that are sort of taking that are sort of
The IRS could see a sharp drop in revenue collected this tax filing season. That's according to a Washington Post report that says senior tax officials are bracing for a shortfall that would be tied to changing taxpayer behavior and attempted IRS cuts by President Trump. The Post cites several sources in an article that says that the Treasury Department is expecting a more than 10% drop in tax receipts by April 15th compared to last year. That would amount to about $500 billion in lost revenue. The article says that the IRS has noticed more online chatter from people who say they won't pay their taxes or will claim deductions for which they are ineligible. Separately, reports over the weekend said that the IRS was closing in on an agreement with other federal officials to help them locate immigrants for deportation. All I can say, I read this report over the weekend. All I can say is if you are thinking about not filing your taxes, good luck with that, because you got 7 years. You got to look out that they can come after you. Tax law could change a lot. Enforcement could change a lot over that period of time. And they're basing this on what they've seen so far with receipts that have been turned in to this point. We'll see as we get closer to April 15th. It's worth watching those numbers. It wouldn't be because last year was a downturn in the economy or because there was a problem.
Can you imagine not filing your taxes?
No, I can't. Then wait. No, I can't. Then wait.
Tired of that saying, I don't know. Yo, what's up? Man, StreamYards is it's goofy today. Can't even end all the videos correctly again. I guess they'll never fix this bug. But anyway, what's up? It's March 24th, 2025. I was thinking of coming on Friday, but then the market wasn't really doing anything, It really wasn't. It was just yeah, you got Triple Witching, Max Payne, you got Jerome Powell, but then it's never mind. We're not going to do anything. So that's weird. It was quite weird. Anyhow. All right, let me get the music going. So this is... these are my gains for MSTR. This is just MSTR from last week, so pretty nice. So these are the ones that I didn't sell, that I kept holding on. So you can see some of the cost basis here. I sold a bunch, a huge chunk last week with the MSTR, and these are some leftovers I sold today right now. As you can see, MSTR is doing quite well. So let me show you some of the charts for that. All right, guys. Yeah. Hold up. Let me present my thing. Okay, so we see here MSTR is around 333. Very nice, very nice. And I see like CLSK. I haven't mentioned the miners, but I think today has been quite well. So it looks like right after the options expiration, we're finally getting some movement again. So the gamma level, I believe the gamma level is shifted. I'm not sure exactly where the gamma level is right now. Okay, I'm not a gamma expert here with the options and all that, but I will play some videos that discuss even more complex I guess concepts. You know, we're gonna do second order option theory here, okay, in a bit. So hopefully you're not gonna get too confused, but yeah, quite interesting. But yes, so CLSK, Mara, good. So I wasn't planning on talking about it, but today the movement from open to close, like we're going to be closing in about 45 minutes. Very good. This is exactly what I want to see at this level here. CLSK at $8.84, bouncing off of the $7.50 area, which is last support here. So if we look here at the old, yeah, this is critical. That's not bad at all. So let's look at Mara. Yeah, it's still underneath this gap area, so it kind of went undercutted the thing a little bit, but whew, that's not bad. Now, will it go up to 18 or something like that? CLSK go up to like maybe 10? Possible. That's possible. Definitely possible. So let's look at some other stuff here. So let's look at one of the stocks that was on the video, BYDDY. I talked about this last week briefly. It wasn't part of my planned talking points last week, but I did mention it because they did announce 15-minute charging. So they could charge like what, 12,000 kilometers. I don't know what it was. 12 kilometers. I don't think it's 12 kilometers. It has to be 12,000 kilometers, something like that, in 5 minutes. So basically, you can fill up your tank. Let me see if it's 1,200, 12,000. I don't think it's 12,000. Let's see, 12 kilometers. Was it just 12 kilometers? I don't think it's 12 kilometers. I mean, that's just 7 miles. Come on, it can't be 12. Okay, charging. Let me see. Charging. Because I read the article last week. Charging, BYD. So let's see. Is this the recent one? $410 kilometers? Is that it? It says, let's see, it was 1 megawatt. Okay, what's the range though? So 250 miles in 5 minutes. Okay, I got you in miles. All right, for you guys. There you go, miles. 250 miles in 12 minutes. Let's see, 250. So it's 400 kilometers. My bad. So it's 400 kilometers. All right. Can't be 12,000. That's 12,000. That can't be right. Okay, so we're back up here for BYDDY 106. Okay, as I said, don't bother buying up here. But hey, we got Tesla moving now. Finally, I've been waiting for 2 weeks for this sucker to do something. So I got in at 222. I used TSLR, 2x leverage. So I got in around 11, 12 bucks. Yeah. So now it's 17, 21. Not bad. Also, TSLR is 2x leverage. NVDL. So Nvidia, not doing much. It mostly did its gains like last week on Monday, I think. So Nvidia is not really doing anything since then. But it's okay if you bought it at 107 here. You got it at 122. But if you did NVDL 2x leverage, yeah, you got in around like either 38, or if you waited till Tuesday, you got cheaper price than me, 35 something. You could sell at 48 last week. So I have some leftovers I'm gonna keep. I doubt it can go up to 50 before the end of the week, like 55. That's what I was hoping for, but hey, you never know. You never know. We got another whole week to go until the end of the month. And let's see what else. IONQ doing good today. So I think it was waiting for the options. So it bounced off that 18 area. I didn't play this one, but if you looked at the chart, yeah, 18 was a good spot to buy. But you know, it could have went to 14 just as easily, but it didn't. So it bounced. It's continuing on. It's at 25.94 right now. And let's see what other ones we have here. QUBT, another quantum computing stock. Let's see another one that Martin Squirrely loves to short. QUBT, not bad. So yeah, it's bouncing off this area. It's in between these two weekly moving averages between the 18 and 40. So I don't know how much further it can go, honestly, compared to last week. You can try holding on, but I think if you are playing these two types of stocks, yeah, you should be out. Let's look at the space stocks, ASTS. Yeah, man. So I think I got in when it started doing this, right here, the 22s or 26 area. I bought again, but yeah, I'm not sure. I might just be like gonna give up on this one still. So I was indifferent last week. I'm like, it's pulling back. I don't know if it wants to go higher. Jerome Powell didn't really do anything. So yeah, ASTS, mixed bag. Not sure how confident I am about this one. LUNR, that had its little mishap on the moon. It had earnings today, so it's bouncing 28.91%, but still it's below this $10 area. Now, this one I'm talking about because maybe some of you guys might be interested in shorting. So what I would say is, like, if you want to short LUNR, I don't know how the options are. Maybe it's pretty pricey to try to short this thing, but if you want to, you can see how it tests this $9.75, maybe up to $10.75. Who knows? Maybe it can go up halfway through this candle here and get to $11 to $12. If it does that, then prepare for a short. Wait for this thing to do its move this week and then get ready for it to short again. Now, AOI, let's see. Similar concept, I think, here. I think if you want to short AOI again, so like I was saying, short around here, around February 24th, that week, like get in that area, like go through here. It bounced up. It's back at that 22 area. Okay, now wait for this 18 to move down. Wait for this thing to move down. Let's see if it can get to 25, 26. Then maybe this is another thing you could think of shorting. So if you guys are interested in shorting something, there you go. You got two things to short. Okay, back to space stocks. Let's look at Planet Labs. Okay, it had earnings. It bounced right at this 40-week moving average. Now it's going to go up here maybe to 5. I don't know. This was a pretty good bounce. Like if you look at the daily chart, this is a good thing you want to see. You want to see people scared, selling off after earnings, and then all of a sudden buyers come in and start pumping it up. That means this area here at around $3.50 is a good place for support. So somebody wants to hold this area. So maybe this might be an actual long. This might actually go around between this range of 3 to 6 again. Now, would you do it now? Maybe wait closer till mid-April when we have tax season like on the peak tax season where people pay taxes. Like watch how it behaves around that time. Maybe look into it. So PL could be something that you could long later on, but maybe not now. Okay, let's see what else we have. ACHR. Okay, yeah, it's bouncing off this $6.80 something level. It's still holding this range from November. Nothing really to do. I'll definitely be watching this into April if I want to add, because yeah, I got in here when it was rising. So I'm holding, waiting to see if this range resolves on the upside. It could. If the market really wants to help out small caps, mid caps type stocks, yes, this could be a good one too. So another good potential long. GEO. Let's see, GEO. Okay, so this is a prison stock, okay? Private prisons. So it went below the $25.71 area, $25.71. It's moving above again. So it wants to hold that level. You have to remember, during the elections, when the GOP won a lot of House seats, Senate seats, this thing really pushed up, and it's been trying to fight this area. It kind of went a bit above in January, but then it pulled back. So now we're going up again. So this range is important. It's building this range. Whether it's just not going to hold altogether and collapse, who knows? So, I mean, we do have El Salvador as a place where they're going to send a lot of prisoners to. So that's kind of a competition right there. CELH, Celsius Holdings. Okay, I've been talking about this briefly a few times on this show. It's energy drink stock. I played this when it was like a rocket ship right here, you know, during the COVID days. And I've been waiting to see what it does when it get overextended. It got overextended, right? You know, you finally busted a move right here to 80s and 90s. You pull back hard, and then you're fighting now at this last. So most of the COVID move was going up to 33. Everything after it is just like, okay, goes to 90, whatever. That's just extra stuff. Now I'm watching, hey, what are you doing here? Are you going to try to hold this level, or is this going to be a short? So this could be a short, or it could be a long. It's definitely been this move here during earnings when it bought out another company. It's very violent, right? You see here. Let's see, move out this thing. 46% here after earnings week. Went down 21%. Went up again last week 21%. Yeah, I don't know. I don't know if this is going to be a good long or short right now, but definitely something to watch. CELH, okay? ERJ was another thing that I looked at last week. Let me check out what it's doing now. Brazilian airplane company here. Okay, it's down 5 something. So now that it's done with options, okay. See, yeah, I don't know if it's going to really try to do anything above 50. 50 is a big level that has to attack. So this thing was set way back when. Yeah, back in 2007, before the great financial crisis. I don't know. Yeah, this might be it for ERJ. So sadly, yeah, if I was talking about this stock like earlier 2 years ago, I would have recommended this. But now that it's did its move here, it's sort of like, I like the company, but the stock might be done. This might be done. Okay. But it's something to look at, because these things are like examples. You know, these are the type of stocks you want to play. You want to look for future stocks like this. So let's look at HIMS. So the Ozempic generics maker and telehealth. Okay, so it defended last 2 weeks the 30 area. It's trying to move up. It's hard for me to really recommend it, because I think these candles here, when it did its huge blow off at 70, I think these are hard things to overcome. But it's definitely holding it. So I think what you want to do is you want to see if it keeps holding this 30 area between 30 and 40. Maybe this is the new range, goes between 30 and 40. And then maybe later down the line in May, it might pop up. Okay, so that's another thing to look at. So many of these stocks you can look at for another month or two and see if you can gauge the market, if the market's really in the mood to recover. Because I think this whole year is a sideways year, you know. Okay, let's look at the Cathie Wood stocks. Very important area, because if you look at the Cathie Wood stocks, these are the most aggressive of the mid cap, small cap type stocks. She likes to play stocks that require a lot of growth to move up. So when you see this huge candles, right, red, 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 all the way down to support in this range, again 48, 40. Now it's going to move back to 58.50 maybe, because last week was very strong. It's continuing today so far. I don't know how it's going to do the rest of the thing. So you want to see how it's going to react in April, because we're going to get a new quarter coming soon. So watch this ETF, okay? Watch because that will tell you what you should do on the individual stocks, because this thing will tell you the health of all the high growth stocks. So ARKK is one of them. And if you want to do the 2X ETF, it's TARK, TARK is 2X ETF of it. So if you feel that we can recover for the rest of the year, go for it. But if not, no. But in any case, look at ARKK, okay? And let me see this here. And then there's another one, ARKF, financial, so fintech, so like Affirm and all those type of stocks. Yeah, these will go into the ARKF ETF, so high growth financial stocks, and then ARKG, so gene manipulation stocks. Watch how they move. You see huge red candles, right? Going back to this area. And then ARKW is internet type stocks. So the most aggressive of the internet type stocks, ARKW. Just look at them like an indicator. These are essentially indicators. They show you how healthy the market is. Because if you look at August, when we had this 2 weeks of decline, it had a huge bounce. You see this? Here we had to go really hard all the way back down, and now we're bouncing. But I think this time around, we won't get above 112 here on the ARKW. And let's look at the WebL. WebL is like a leverage version of like all the internet companies, not the aggressive ones, just all of them. So yeah, these things will take time. This is 3X leverage, the WEBL. It follows FDN ETF. So you can see like the web ETFs, the internet ETFs, right? The Meta, the Googles, and whatever, all these big name ones. And then ARKW is just the most aggressive ones. So they're similar. They move similarly, right? You see they had a nice trend from 2022. They had a nice big trend, but this past 3 weeks have been very damaging. So I think we're going to have to go sideways for a while till the end of the year. Maybe it will only explode back up in October, okay? That's something you got to watch for. So let's look at the other ones. Semiconductors, SOXL, 3X leverage, up 9.5% almost. So not bad. So if you got in here 2 weeks ago around $17, you know, I sold some, I kept some. I'm hoping it can go up to 25 if I'm lucky. 25 SOXL, and this thing follows the SOXX ETF. And you had MU Micron had earnings on Thursday. It was bad. Everybody knew it was going to be bad. It moved down, so it got caught up last week. So if you look at the daily action last week, it was stuck in a range, right? You got here at the bottom, you go up, you got stuck, you go back down into Friday because of MU earnings. Actually, Nike had earnings too, terrible, so that didn't work out. So it was down maybe 5.46%. And then what else? You had FedEx also reported, so that was also bad. That was recovered though, but yeah, it was bad last week. It was let's see, at most it went down 11%. Yeah. So let's see what UPS was doing at that time. Yeah, UPS still stuck in this area after the earnings in late January 30th. So, oh man, I don't know. These shipping companies, I think, yeah, Amazon is just gonna kill them. Yeah, Amazon's pretty much going to kill them. So you see Amazon here. Now it's above this line, 200. Yeah, I don't know. It's hard to say. I think it's hard to say. I think it's still a trader's market. You really have to trade around everything now. There's nothing where I would say, yeah, I can hold for 3 months, no problem. No. I think the only time I'm going to say that this year is when I say, hey, if we got some good moves on natural gas, right? So this natural gas ETF, I think it bounced off the 22. Yeah, see, it's still stuck in this range. But yeah, maybe in May. So around April, I might start saying, yeah, time to buy. So let's look at the natural gas ETFs, Boil, Cold. Yeah, Boil's down a little bit today. It was pretty much down like since last week on Thursday because it had the Henry Hub report, so it kept pushing down. So we're back here at 78 on Boil. So if you're in Cold, yeah, watch how it goes. So yeah, if you were buying Cold up here, I didn't do it, but you could have shorted Cold right there 2 weeks ago. That would have been a good place, and you could have kept it. You didn't need to sell right away, you know. You could have kept holding it because you might be able to get to 25 from the 16, 17 area. But you got to switch to Boil. You got to be thinking about it right now. So Boil, like if this breaks down here, like let's say it has a flush down to 65, I would buy it. Yeah, I would buy BOIL. Okay, so let's get natural gas. Yeah, it's down here. See, it went right back through this rectangle area zone between $3.90 million BTUs, British thermal units, $4. Yeah, and then let's see if it can get down to 360 or 340. I don't know. That's probably a pipe dream, but you never know. It might. So Mexico, let's look at Mexico. I wasn't going to talk about it today, but let me revise it a bit. We're still in the 12 area for MEXX 3X leverage of Mexico, EWW. So if you have to wait, then you're going to have to wait till April 2nd. Trump is going to issue new tariffs, retaliatory tariffs on April 2nd. So watch how the market reacts on Mexico and China at that point. And yeah, the market overall might just go down anyway. So that's something you should watch. All right. Let me see. Everything I just checked over. Okay, today. ARC W. Yes. Covered that. Let's see. What else I should cover? Covered that. Okay, good. I covered everything. All right, covered everything. So let's go back to MSTR, see how that one's doing. So it's holding on. We got about 20 more minutes until the market closes. Not bad. So if you look at the MSTR chart overall, you see like we've broken out of this daily 40 moving average going down. You have a curving up of the 18 moving average. We have through this resistance level at 324-ish, right? So let's see if we can get to 355 and then onward to 383. If we're very lucky this week, we can get all the way back up here because I want this thing done by the end of this week. I do not want to play around when the quarter rolls over because the quarter is going to roll over. Okay, guys, that's what it is. The quarter is going to roll over, so be careful. Be careful. We are not safe by any means. Okay. All right. I think we're good for now with that. So let me play some more China stuff here.
Essentially a game changer because Ant is claiming that it's able to train AI models using Chinese chips from the likes of Alibaba and Huawei at a 20% cheaper cost. And it's training models that uses the MOE machine learning model. This is mixture of experts machine learning model. Essentially, it breaks down a task into small data sets to make it more efficient. You can imagine it's similar to employing a team of experts, each focusing on a specific part of the problem to enhance the overall efficiency. So typically such an approach will require the very high bandwidth memory chips like NVIDIA's chips, which are under export control. But Ant is saying they are able to achieve the same results as if you were using an H800 chips, which is the scaled back version of the NVIDIA chips that were tailored especially for the Chinese market in order to meet the export restrictions. And it's also claiming that they were able to beat Meta on some of these benchmarks, such as English language understanding training, but it claims that there are still some teething problems with training because, especially when it comes to stability, if you just change the hardware or the AI structure, model structure, just a little bit, it leads to a jump in error rate. But still, it's an important breakthrough because it would really lower and slash that development cost, because the MOE model has been pretty prohibitive because it relies on those chips that are not really accessible to smaller firms, and it could put China on track to being self-sufficient in the tech race if they're able to make more efficient computational models that do not rely on these very advanced chips.
Okay, so a game-changing moment. Does it fundamentally then shift the rules of the game and the calculus for policymakers when it comes to US-China tech competition?
Yeah, so the way this competition has evolved was because of the policies from the US. And the two sides, US and China, are competing on very, very different paradigms because recently we had Jensen Huang saying that the DeepSeek moment, the fears around that and whether that would affect his company is unfounded, because he says companies will still need better chips with greater computational capacity, and he's still doubling down on his strategy of having bigger GPUs with more transistors, more memory, more processing cores. But China is going the opposite way, where they're going for cheaper chips, but they're changing and making the computational model more efficient. So it's a very different way of doing things here.
Leaders are taking the opportunity to pitch directly to American CEOs. The premier on Sunday headlined the China Development Forum, and by doing so, he listed out a number of reasons why American investors should invest. China's recent consumption initiatives, he said, plans to open more sectors to foreign investors, preparedness for what he described as possible unexpected shocks. So that was seen as an oblique reference to President Trump's tariffs and a brewing trade war. Apple's Tim Cook attended, and in fact, he today announced a new $100 million clean energy fund for China. Separately, Republican Senator Steve Daines met the premier with some of those CEOs, and Daines' office said that he pitched the idea of President Xi and President Trump meeting at some point directly. The other interesting thing that we learned from a lot of the folks at the conference is that some of those CEOs are going to meet face-to-face with President Xi Jinping on Friday. Guys?
Very good. That would be good. Get a meeting. Whenever it's face-to-face, it seems like good things maybe happen at that point. And that would a little bit of easing of some of the tension with the trade tension. I don't know how the security and all the other problems that the United States and China are faced with in terms of, intellectual property and all those things are on the one hand. But it'd be nice if reciprocal trade, if the tensions could be lessened there, I think, Eunice.
Yeah, I mean, there are a lot of problems, and I think one thing that was interesting at the conference is that even though publicly the mention of tariffs wasn't really there on the panel, just kind of limited, but privately people were very concerned about the trade tensions, especially the tariffs, and you mentioned face-to-face, that's really important. Actually, a lot of the American companies were telling me that they were advising the Chinese, or suggesting to the Chinese that one of the things that they needed to do was to get a face-to-face meeting with President Trump in order to have greater influence over the American policy towards China.
Yep. That I think that can. We're all human, and Trump more than President Trump more than most, it seems like, in terms of human relationships and things like that. And don't you think? Kind of.
That's an interesting.
Good and bad. Yeah. Good and bad. I think it helps to meet him personally and say, let's work together. But that's okay. That's okay. And to be a little bit mercurial so that the other person's like, whoa, I don't want to screw up here.
But I'll throw a little caution on there. Oh, Joe, no, I'm just going to throw a little caution because I think what's interesting is Daines' office was talking about this potential meeting. But here in China, in the state media, a meeting between Trump and Xi isn't mentioned at all in the readout and in state media from Daines' meeting. with the Chinese. So I think that there's quite a bit of caution. You know, I've heard a lot of talk about how President Trump hopes to have a meeting with President Xi in Washington, and then just based on what we've seen with the way that Vladimir Zelensky was treated at the White House, it just seems like such a very unpredictable situation to throw President Xi in. So I think that the expectation, at least from a lot of China folks, is that if there's going to be a meeting, it's going to be on Xi Jinping's terms.
Okay, so let me review the MSTX trade right now, because since we got a good movement, it looks like it's going to end the day quite well. So if you're doing 2x leverage with MSTX like me, let's say it goes up 30% more, that's optimistic. Okay, then my target will be 45, maybe at the end of the week, if we're lucky. If we can't even hold this tomorrow, let's say, then I'm not hopeful. So I think today and tomorrow and Wednesday, tomorrow and Wednesday, it's just, you have to consider this thing holding. Now, if it doesn't hold, like let's say it pulls back again, okay, so let's look back at the MSTR chart. All right, because this is really good. You want to see it hold at least 50% of this candle around this 324 area on MSTR. All right, you have to maybe a couple days, you wait for this moving averages to move up, and then you're more confident. Then I would say Thursday to Friday. Friday will have PCE. Okay, PCE. I'm not sure how that will affect like the Bitcoin itself. Let's see what Bitcoin is at right now. Let's see. Because I think we're close to 90K on Bitcoin. Yeah, we're pretty close right here on a daily. Shoot. Okay, yeah, this is gonna be important. We got to get through 90 probably in the next 2 days for me to be confident. Otherwise, I'm just selling my trade. The last of my trade, I'm out. Okay, I mean that's good, like 20 G's, but you know, I want a good swing trade right here. I'm really not interested in going back to doing some day trading again, because we probably will have to do that next week. Next week it's gonna go crazy again, because now we're done with the quarter. People are just gonna position themselves for the next earnings season. The options have cleared out this week, right? It's cleared up today, so we don't have the limitations of the quarterly options. They're gonna try to get new quarterly options for next quarter. We're rolling over. We got a lot of things to think about. So the whole market will just be in flux for this week into part of next week. And we know April 2nd, Trump is gonna do some retaliatory tariffs of some sort. So that's gonna come into play, all right? So let's look at Sol, S-O-L. So let's look at Solana, because I was playing some of those videos. It has futures options now. So you got the futures, you got your options on Solana. So now it's mainstream. And yeah, we are moving up today. So from the opening of futures last week, we are up today 7-something%. But still, overall, you have to consider like how it's been performing for the last 90 days. And it hasn't been good, right? So like a lot of the altcoins haven't been doing very well. Last couple sessions, couple monthly sessions here. Oh, my bad. I didn't want to put that again. My bad. Okay, let's look at the altcoin season stuff here. Look at that. So we are at 27. We bounced off of 25. So we are still in this range here. So we are not in altcoin season. We haven't been since we failed. We've been trying to get into it, but we failed. So let's see. This was like November, into the December, and then we collapsed after Jerome Powell, and then now, we're back here. Okay, and if we look at how the overall performance is, you look at the overall performance, you look at Sol. Sol is down here. So 30%, negative 30% for the past 90 days worth of performance. Okay, so not many altcoins have survived holding their gains. Okay, everything's been moving down, and Bitcoin has been moving up. So yeah, people have been running into Bitcoin and moving out of the altcoins, and then this will flip again. So the question is it now, or do I have to wait for April? So it's either going to be now into April, and I have to wait later on until tax season, peak tax season, so around April 15th. And you heard like the whole news, they were like thinking, well, a lot of people are thinking Donald Trump slashing a lot of the IRS workforce means that people are just going to dodge their taxes. They're going to either file it erroneously with a whole bunch of deductions that they aren't supposed to receive and see if they can get through the screeners, or they might not even file at all. So that might be interesting. So April might not even be a big deal like it usually is. Usually April, a lot of people will file their taxes and the market will kind of take a little hit for a couple weeks, but maybe this time around it might not. So yeah, this is very strange. I think this is a very strange time we're going into that we have to consider. Okay. All right, so I'm going to play some Martin Shkreli stuff here. We're going to get into some quantitative analysis. All right. So I'm going to play some couple of videos about quantitative analysis. Let's see what Martin Shkreli talks about options. All right. So this might be a little introduction to some of you, for some of you guys.
I don't like ever buying vol. Okay. Anybody who buys vol is kind of a sucker to begin with. So you should never want to be long vol, especially after a VIX spike, right? The old saying is the premium writers make the money. So if you're long vol, you're really making an opinion, a strong opinion. And here's the thing, okay? If you're short a stock or long a stock, let's go long because it's easier to understand. If you're long a stock and it does this, isn't this the best possible thing, right? This is the best possible chart according to many investors. Some investors think the best possible chart is this. Some disagree. There's a big, debate out there in the high-end investor, high finance community. The problem with this is the vol, which is unlikely to repeat itself. You're not going to keep going up in this direction, right? This is much more realistic.
So what he's saying is, like, if a stock moves up rapidly like this, the rate of change, the slope of the chart is very high like this, that means your vol goes up. So that's important for people playing options. If you just bought a stock like straight up stock, you don't need to worry about this, right? You just bought the plain vanilla stock share. You don't care how it gets to that price. If it goes there tomorrow or it goes there in 5 years, you're happy. But people playing options, you got to worry about this part of it.
Because when you have this, you're probably going to have, something that looks like this. Then you have something looks like this. Options are great in this regime, right? Options are terrible to own in this regime. So you might be bullish on a stock and buy calls and you get this guy. And you are upset because your calls didn't really appreciate in value because you played a high implied volatility, high IV. And if you're not looking at the historical IV and stuff like that, which again, I'm going to teach you guys with Godel at some point. I'm going to teach you guys all about options. Then, we got an options expert. We might be bringing on senior Wall Street guy. Smart Wall Street guy, put it that way. Regardless. An options expert. So you got to be pretty smart about how you play options. And I'm not just, when I say smart, I don't really mean smart. I more mean like lucky and good to the point of it being impossible. Most people cannot predict, is the stock going to be volatile this month or next month? That's silly. Who can predict that? Now, if you're sitting on Wall Street, you got 18 monitors, you got 15 brokers, you got 200 people calling you, you have all kinds of information. All right, maybe that's a little different. Talib can't do it either. They just roll vol. A lot of experience. You're still going to be batting 51%. Okay. So, listen, I tell you straight up, I can't do it at all, and I've done all those things. So, if you think you can predict the price of vol, good for you. But every time you buy an option, you're not just doing a directional bet. You're doing a vol bet and a directional bet, right? So, one more time, let's say you've decided you're bullish, okay? You're bullish, okay? So you basically say, I'm bullish, so I'm going to be long. I want long exposure, right? I want long exposure. So what does that mean? Well, for a lot of people, they reach out and say, I want to buy the calls. But the problem with that is you buy the calls, sure, you're going to get long exposure, but you're also long vol. You didn't ask for that. You just want to be long the stock. But you're making two bets now. Or there's another way to get long exposure is you sell puts. Now you have long exposure and you're short vol. So crazy idea. Maybe you do half of this guy and half of this guy, and now you don't have a vol bet anymore. So you just have your long exposure, which is what you wanted. For a lot of people, they just want leverage. Now, you don't really get leverage with shorting puts. You only get leverage with being long stock. Well, there's a couple things you could do here. You could have portfolio margin, and you can usually get 2 to 3x. I think single stock futures will give you some leverage. I think single stock futures will give you some leverage. Most people don't trade those. And finally, deep in the money. Deep in the money calls will generally give you a lot more leverage than common, but you got to go pretty deep. Well, I'm talking 99% delta, 95 to 99% delta if you want the leverage. And you'll get like 5x leverage up to 5x leverage and this kind of thing. But if you want 10 to 20x leverage, you're going to have to sacrifice the delta, in which case you're just gambling again. You're long vol again. Well, if you're short vol, you don't have to worry about theta bleed because your short option is going to pay you as the theta, and the long option is going to spend you theta. Hingle McCringleberry, Wayne State.
And it's crazy. I started buying all these. Yeah, it's wild.
IQ is really 28. Isn't this what we've been waiting for? I used to.
Order partially filled. Order filled.
I'm gonna put Meek Mill on my board of directors. Let's see how our investors feel about that.
Order filled.
don't worry, you're not gonna believe the stuff I'm gonna give you with Godel. You're gonna have the professional's viewpoint. They're gonna be mad at Jane Street. They're gonna be mad at Susquehanna. They're gonna say, what the fuck? How's he teaching them this shit? I'm gonna say, you've been eating long enough. Stop acting greedy. I'm just kidding. We're gonna help those guys too.
Order partially filled. Order filled. Order filled.
There you go. Eric Wong knows the song. You see, all these kids growing up now, they're not going to know DMX. It's my job to teach them. And I'm definitely going to be doing a lot more content on teaching. You know, I've been slacking on that, but I think it's really important. One, because look, I mean, business-wise, the youngins are important. One, because look, I mean, business-wise, the youngins all become grown-ups at some point. And there's no real great place for this kind of content.
Order filled.
You know, a lot of the entrepreneurs of the mid to 2010s, they watched my videos because there's nothing else to watch from serious business leaders that were like going ham. There's just nothing to watch. So they were like, I'm a tech guy, but I'm gonna watch this guy anyway, even though he's a finance guy, because at least he's like, he's in founder mode. He's in, you know, he's hustling. So a lot of those guys watched me and they created billion-dollar companies. I'm so proud of those dudes. Shout out to Ryan, who just tweeted yesterday. Really nice.
All right, guys. The market closed. Okay, so I'm done with that. I think we're done with that part. But I think it's very important you understand what he just told you with the various basics about vol and whatever. It's you know, that's why I don't play options. It's like a whole nother level. But yeah, you can go to app.godel, Godel terminal, terminal.com, and he's trying to make his own Bloomberg terminal. You know, if you get in early, I mean, a lot of you young guys, maybe it's worth it. Maybe it's really worth it to just buy his stuff, get access to his terminal, you know, get the data. And if he's bringing in people to teach you like options and whatever, to give you insights, you know, that's really helpful for some of you people to get an edge. So it might be worth it. It really is. I think right now, I wonder how much you get off if you get in early. I think if you buy in early, yeah, whatever subscription price you get in, you just pay that forever for the rest of your life or something like that. Anyhow, yeah, I don't know what his pricing is. It's pretty cool. Yeah, you should check it out. Definitely check it out. All right, so we got here SPY. We're at the top. We touched the top of this rectangle. Very important area, 575-ish. Okay. The bottom of this rectangle is 570. So this area here, important. So we didn't do this purple line move here that I was predicting, right? Back in early March. We went down lower. We had to hit this level. Now, will we get up here? Is this where we want to be? Is this where we want to be? Can we get up here at least? And then fall back? Or maybe, okay. We will fight here, fight, and then go up and then drop. I don't know. April is going to be wild. It's going to be a wild one. So let's look at the QQQ. Let's see. We ended around 490. Let's see if we can get to this boxed area between 498 and 504. So NASDAQ 100 ETF, right? Let's see if we can get to this thing and go back down. That was what I was thinking. Like maybe after Powell, it would do this and then come back down. Perhaps. We'll see. We didn't get much of a juice up from Powell, so let's see what happens this week. If we get into Friday with the PCE, maybe we get a Friday bounce, and then Monday, the last trading day of the month, perhaps that will be the final move up, and then we move back down, and then we'll fight it out down here. Let's see what happens there. Okay, so that's about it. Okay, so now I'm going to present to you another Martin Shkreli video. He's going to talk about quantitative analysis. All right, let's see. Let's see what he says.
Futures quant, man. The stock jock is dying. I mean, the stock jock will never completely go away, but if you can't see the quant writing on the wall at 2025, you're blind. If you didn't see the writing on the wall in 2020, you're blind, or 2015. Yeah, Red Scare.
Yeah, he is using scissors to cut his beard right now.
Maybe Sanu, maybe. I haven't been on Red Scare yet, but not a big fan of Meg Terrell. She's a real piece of work. I don't think you should stop trading, but I think you should level up some statistical and programming capabilities. Not too hard. You know, people think it's some kind of voodoo rocket science.
Order filled.
Well, stock jocks talking to management teams, calling up other traders, looking at the earnings, looking at the product, all that stuff. Quant's just writing a computer program, let the computer program go ham. With all kinds of different strategies, short-term, long-term. Yeah, I mean, there's hundreds of different things you could do as a quant. Yeah, I think maybe we make a Taylor Lawrence token. Rip it. I am a stock jock. I'm 100% a stock jock. I'm telling you, it's a dying breed. The last gunslinger. There you go. James got it. I'd say the quants are more like the stockfish itself. Yeah. And the stock jocks are Magnus.
Order filled.
Yeah, it's not easy to be a quant. You got to be brilliant. So, but, if you love the market, you'll figure it out. Shit ain't that hard. It's hard, but it ain't that hard. You want to make some money?
Order filled.
It's not easy to get a job as a quant. I agree with that. D. Shaw looks at 500 people to hire one person. Basic understanding of linear regression, great place to start, buddy. That is a great place to start. Honestly. All the papers are out there. You can read them all. And as I'm sort of saying this, as we're talking about this, I'm not saying you're going to be Susquehanna or D. Shaw, okay? What I'm saying is that even if you're just thinking about it, that's a good start. You are getting, then next step is go read a paper, go read an academic finance paper, go to Google Scholar. You know what? Do you want me to do it right now? Scholar.google.com, okay? What do we want to learn about here? Let's do pair trading or pairs trading. Pairs trading, okay? This is a paper from 2005, okay? I want you to read this paper, all right? That's it. That's your homework. Take baby steps. You might not like it. You might love it. Doesn't matter. You're leveling up a little bit. You understand 5% of it? Good. Better than understanding 0% of it. Yeah, quants are just getting started erasing market efficiencies. You do fast Fourier, you're in good shape. Quantum FFT. Sub-Justin. Yeah, you can put it into Grok, but I would put each paragraph and I would ask specifically what the stuff that you're confused about. Don't put the whole thing into Grok and ask for a summary. That's called abstract. You can read that yourself. Look at the terms you don't know and say, Grok, what does this mean? What does the word stochastic mean? What is a partial derivative anyway? You know, those are the kinds of questions. What is co-integration? You know, if you just toss it in there, you're not putting any effort in it. You don't put any effort in it, you're worthless. Go fucking go and live in a dumpster. Go ahead, go. Go roll around in the dumpster. You're gonna smell great after. That's what you should do. You don't want to put any work in. I just want to put it into Grok. Yes, but put into Grok every sentence you don't understand. There's so much to know about math, statistics, and finance. It's an enormous, enormous thing. And you know, I drop some nuggets here and there, but I'm not gonna. If I could do a different channel. But there are people that want to be quants. There's a lot more people that want to be quants these days. So you know, maybe I'll break out the Python and we could do some stuff. I don't, you know, I think I've made this somewhat clear. I'm an entrepreneur. That's my shtick. You know, trading to me is not really something I want to do. But I'm making, you know, I have a market software company, and you know, to sell the software to traders, I got to show people a little bit, but I'm not, you know, I make my money by building big companies and selling them to even bigger companies, or the public. That's my MO. I know this field really well, but the stress that comes with being a trader, the frustration, the amount of work you have to do, all those things are pretty huge, and I prefer to be an entrepreneur. So when I'm trading out here, it's really not for my own profit as much as it is just to show the software. This is what I'm working on. I hope you guys want to use it. But
order partially filled.
If I could do that without
order filled,
trading at all,
order cancelled.
Because trading is just very hard. I mean,
order cancelled.
It's a mental game. Some people are good at it. You know, some people are really good at it. But to me, the amount of mental stamina you have to have, it's not just
order filled
one time, it's every day.
Order partially filled.
When you trade.
Order filled.
You know, you are really, really kind of with it.
All right, so you got that, right? You're gonna have to be mentally sound to play this game. So let me go over some basics with the options right now before I play this next video. Okay, we're already above the hour mark. So hold on to your hats. All right, here we go. And all the links are in the description, okay? Greeks to know for options pricing. I guess 19 plus Greeks. I didn't know there were so many of them, but hey, there's a whole bunch of them that you probably didn't know either. In quantitative finance, and especially with respect to options pricing, Greek letters are used to relate the sensitivity of the options price to changes in the underlying parameters, such as price, rate of change of price, time, volatility, and interest rate. Delta, gamma, theta, vega, rho, respectively. They are often simply referred to as the Greeks in finance, trading, and investing circles. They are also commonly labeled hedge parameters or risk measures. The Greeks are relevant to all types of options pricing, no matter the underlying asset, stocks, bonds, currencies, commodities. And you got this nice little table here. Okay. And most of you probably know the top three ones: delta, vega, theta. So the change in price, right? The change in volatility, and the change in time. So as we get closer to the expiration date, as the volatility goes up and down, we got a little taste of that with Shkreli talking about, yes, when you buy options, you have to care about this parameter, unlike you buying the stock or shorting the stock outright. And then, of course, price. Everybody knows price affects everything, even in normal vanilla share prices. Yes, they will affect the options themselves. And then we have other things: gamma, vana, charm. And I've discussed gamma only to explain how the Max Payne theory works, right? How the money market makers, the money movers, are trying to make everything delta neutral. So that's why delta is over here. Delta and gamma are related. And that's it. Now we're going into Vana and Charm, because Vana and Charm is discussed in the next video. That's why I have to go over this with you guys, okay? So let's review. Below are the 5 that are most relevant to options pricing. So we'll just discuss a few of these, all right? Delta. Delta indicates how much you will make or earn should the underlying asset increases by $1. If delta is equal to 0.524, that means for every $1 increase in the underlying asset, you will make $0.524 per share. Per options contract, which has 100 shares, you would make $52.40 with one options contract. It's important to note that call options always has positive deltas. Put options have negative deltas. That's why when you buy your call options, right, you are bullish, and when you buy your put options, you are bearish. Deep in the money options, ITM will have deltas near 1, where profit is almost tick for tick with the price of the underlying. Deep out of the money options will have deltas near 0 and move minimally with the price of the underlying. So anyway, theta here, this is something we haven't discussed, but I think if you played options, you already noticed this. Theta measures the time decay of an option. For options that are at the money, theta will increase as the option approaches expiration. For in the money or out of the money options, theta will decrease the closer the expiration. Theta helps explain how time will erode or increase the value of an option. The further out in time before expiration, theta will not decay as fast as it will be close to settlement. So, okay, that sentence messed up. Now, over here, look at this. Theta helps explain how time will erode or increase. Now, when will theta actually help you? That'll help you when you sell the option. So the market maker, when they sell the option, they want you to have an expiration. That's when the option will get worse and worse. Okay, so if I'm selling an option, I want that to happen. So I'm going to get a negative theta. All right, let's move down here. Vega measures the sensitivity of the price of the option to volatility. Vega has a tendency to be thought of as precisely synonymous with volatility due to the fact that they both start with the letter V. However, volatility is described through sigma, where Vega is a property of the actual option itself rather than an input parameter like volatility. An increase in volatility will naturally increase the price of both call and put options. Likewise, a decrease in volatility will decrease the price of both call and put options. That's what Squarely was saying. However, each option is a bit different regarding the sensitivity of its price change due to volatility, which is quantified through Vega. Higher Vegas are seen for at-the-money options, while lower Vegas are seen for in-the-money or out-the-money options. All right, I think you got that. Row, I don't think people care about because Row only is affected by interest rates. So unless we got some wild interest rate type situations like we did in 2022, I think most people pretty much ignore this. Okay. All right, here we are. Let's go to the second order Greeks. Second order Greeks are higher order Greeks that take into account the changes in the underlying Greeks. The most popular second order Greeks are Gamma, Vanna, and Charm. These higher order Greeks give a trader a more complete understanding of how their position will react to the underlying or other Greeks. These Greeks can be useful in managing a portfolio of options and other derivatives. Gamma denotes the rate of change of delta as the price of the underlying changes. It is essentially the derivative of delta with respect to price of the underlying. So now we get to like the first order, we're going to the second order. Now, a lot of this stuff is the reason why these quant firms, they love to hire people with engineering, physics, math degrees, because all people that have to go through advanced STEM courses in college have to know partial differential equations, calculus, basic level, and then some, with engineering degrees like mine, we get into modeling and things like that, where we can analyze this, because most of this stuff, or physics, if you do quantum mechanics, this stuff you can understand right away. Okay, because that just takes into account the fact that yes, everything has a variable, and then there's another variable on top of that variable, and you have all these things, parameters, all worked up together. So people with some quantum mechanics type background too in physics, this is easy. This is really easy for them. Okay, gamma denotes the rate of change of delta, right? I said that, as the price of the underlying changes. It is essentially the derivative of delta with respect to price of the underlying. Gamma is highest for options that are at the money. They will change minimally for very deep in the money or deep out of the money options. Okay, so then you got this chart here. All right, so I think now you know where they try to derive all these gamma flip levels and things like that. Gamma is also often described as the rate of change of an option's delta per 1 point or percentage point move in the underlying asset's price. Gamma is the second derivative of the value function with respect to the underlying option. Most long options will have positive gamma, and most short options will have negative gamma. Long options have a positive relationship with gamma. This is because as price increases, gamma will increase as well, which causes delta to approach from one from zero long call options and 0 from -1 long put options. The inverse of this is true for short options. Gamma is greatest approximately at the money and falls the more out of the money, the more out you go in the money or out of the money. When traders try to delta hedge a position, they might also try to neutralize the portfolio's gamma. This helps ensure that the hedge will be effective not just under a small range of price movements, like in the case of delta hedging, but over a broad range and help correct for the convexity of value. Okay, that's way too much stuff here. I don't want to get into convexity and all that, but yeah, if you go to, what's his face, Jem Carson, that dude, like, yeah, that dude's like really into that stuff. So his name, he's a Turkish guy. So Jem Carson is spelled with a C. Okay, so you can go look it up in Twitter, or he has some stuff that he talks about all the time. So here, Jem Carson, you can look up. That goes way into that in-depth stuff. Well, what I'm gonna do is just gonna talk about this Vanna stuff a little bit here, and Charm. Vanna, which is we haven't ever covered in the show. Vanna is the rate of change of an option's vega per 1 point or percentage point move in the underlying unit's price, underlying asset's price. Vanna is also known as D vega. I think this is divide D vega over D spot. So the vega the change in Vega over the change in spot, or the change in delta over the change in volatility. It is a second order derivative of the options value once to the underlying spot price and once to volatility. It is equivalent to, okay, the change in delta over the change in volatility, which is the sensitivity of the option delta with respect to change in volatility. Because Vanna tracks delta and Vega, it can be useful to monitor when maintaining a delta or Vega hedge portfolio. Vanna can help the trader to anticipate changes to the effectiveness of a delta hedge or volatility changes or effectiveness of a Vega hedge due to the changes in the underlying asset. All right, well, that's great. I guess here it is. Okay, I went to another website to give you a better looking equation for you guys to screenshot if you care. Okay, so this is what it is. So essentially, Vanna is the behavior of delta when volatility jumps or recedes. As volatility rises, the time value of the option goes up, and this causes the delta of out-of-the-money options to increase and the delta of in-the-money options to decrease. The Vanna is negative for in-the-money options, while positive for out-the-money options. All right, well, maybe that didn't clear anything up, but you got that, okay? Now, here comes charm. Charm is the rate of change of an option's delta per 1 point or percentage point move in time to expiration. Charm is also called change in delta over change in time. Charm can be an important Greek for traders to look at when delta hedging a position over periods where markets close, such as a weekend or extended holiday. Charm is a second order derivative of the option's value once the to delta price, okay, and once the theta passage of time. It's also accordingly the derivative of theta. Accordingly, the derivative of theta with respect to the underlying asset's price. The mathematical result of the formula for charm is expressed in delta over year. It can be informative to divide this by the number of days until an option's expiration to arrive at the delta decay per day. This use is relatively accurate when the number of days remaining until option expiration is large. However, when the option is near expiration, charm may change quickly, making this estimation of delta decay inaccurate. All right, here we go, charm here. In options trading, the second order option Greek charm, also known as delta decay, is a measurement of the change in an option's delta due to a change in time to expiration. It is a second order derivative of the option price with respect to time. The interpretation of charm is that it tells us how much the delta will change for a 1 day decrease in time to expiration. For example, if charm of a call option is 0.05, it means the delta of the option will increase by 0.05. If there is a 1 day decrease in time to expiration, charm is delta time over the delta delta, that's the D here, over delta time. Okay, well, the delta of the option delta and time is the time to expiry. All right, yeah, okay. This, if I'm gonna say the delta of delta, you're probably gonna get confused. All right, okay, never mind. I'm not gonna read any more of this, but all the links are in the chart, and I think it's better off you read a book for this. I don't know how to dumb this down, honestly. Once I saw this type of stuff, I just said, nope, I don't want to know any of this stuff really too much. But I think nowadays, with a lot of the AI and tools that are available, it might be worthwhile, right? And then Scully is saying, like, it's true. If a lot of people are moving into quantitative analysis stuff, it's going to be tough to compete and have an edge. For now, it's okay, but maybe in 10 years down the road, it's going to be trouble. All right, so I'm going to play this video. All right, let's see it. Let's see how much. I haven't really watched all of this. I don't know how easy it is to digest, but I think it's interesting to say. It's from Samantha LeDuc. She had a special guest on because the other guy had Hans had something to deal with, and so she had to bring this other guy on, and he's more into this advanced quantitative analysis. So maybe you get a little flavor, okay? You get a little flavor. Let me see. Is it this one or is it this one? Okay, I did this one on February 26th. All right, must be this one.
Introducing the 3-part options course with Hans Albrecht. Get access for free by scanning this QR code or clicking on the link in the description.
Welcome, everyone. This is Macro to Micro Options Power Hour. I'm Samantha LeDuc, founder of LeDucTrading.com. Very, very happy that I could be joined by Jason. So Jason invited me in Monday for his show, Monday morning, way early. And Hans this afternoon had to take an exit for a family affair. And I basically asked Jason if he would like to come in and share his market structure views, since we obviously have Fed Day today, monthly at the end of Friday, quarterly, which is a big one at the end of the month, and then of course reciprocal tariffs hitting April 2nd. And he said sure. So I'm so grateful, Jason. Thank you so much. And to give folks a little bit background on Jason, he has a Twitter handle, Wizard of Ops. He also runs a newsletter. He's an RIA. He runs a fund. I've actually stalked him because he's frequently on the Schwab network for his appearances. And last but not least, he's got tools. He's got quant tools. I would say you're a geek and you put together some really great geek tools. So we're talking with a quant and RIA and just general great guy who shared his thoughts about 5780 Monday morning, and we came really close today. So give us your thoughts. I get a chance to interview. Yes, exactly. So share your spiel here, what you saw and where we go from here, because this was Monday morning and now we're, the day is done, the week is over. Let's hit it. What do you see? And yes, and of course, this is also a Q&A format, Jason. So if we get some questions, Zoom Q&A, hit us up. We'll be happy to answer as we go through.
Yeah, that'd be great. Hello, everybody. My name is Jason DiLorenzo, the Wizard of Ops. It's a pleasure to be here and to kind of show you how we look at the markets and option positioning and stuff like that. First, I just want to introduce, this is Volland, www.vol.land. And what we do is we are an option dealer positioning service, but not like any other one, because what we do is we consume the whole Oprah data feed. We have a calculation, a fair price calculation that's similar to what the CBOE uses. And to determine on which side of that fair price calculation, that helps us determine if dealers or customers own the option on every single trade that's executed in the day for 240 equities, ETFs, indices, that kind of stuff. And that's our methodology. We also have some comparative analysis to open close data as well. So as far as calculation go, or as far as categorization goes, I have not yet found any kind of data set that's more thorough than we are. That being said, what we do then with that information, with this net open interest information that we've developed ourselves, is we convert that into all the first and second order Greeks. So the dealer book on Delta, Gamma, Vega, Vanna, Vama, Charm, and Rho, okay? And so the positioning across. And that helps you determine how dealers are hedging and also how customers are positioned for certain events like FOMC or Trump speaking or whatever. You can see how people are hedged and how people feel about the current macro situation. So Samantha, do you have any questions about kind of like that quick rundown of what we do? And then I could talk a little bit about our studies that we've done to kind of tell you what to look for in our database. And then I'll show you what I saw.
Yeah, so I definitely want to know the aggregate, because this to me is most interesting. Are they, buying or selling puts relative to buying and selling calls? I like to look at the quant flows, not just what, the big funds are doing, which you can kind of track a Nomura type of play of CTAs, long or short, risk parity, vol control. You're giving tools that help, I don't want to say day traders, but those who have obviously event risk that they're planning. Like last week, we actually talked about this. VIX peaked on the 10th. I actually warned clients the IV would be falling into VIX expiration this week. So take care of your SPY puts, etc. So that's the kind of stuff that I generally follow, but I'm a solid generalist, right? I really am. Macro, intermarket, technical, we talked about that, and quant. So you're more focused on the quant, and how do folks use these tools? In other words, how did you see for today's positioning? What do you see for Friday? What do you see for end of quarter? And then show us with the charts so we can understand, please.
Absolutely. So the first thing to note is, even though the popular chatter is more about gamma positioning, through our studies, we found that the most important positioning is in Vanna. And the reason why is because dealers religiously delta hedge. You know, this through our research, we know that dealers religiously delta hedge and they gamma hedge in a certain way. They don't always gamma hedge, they just sometimes gamma hedge. But what they don't hedge very much is Vega, implied volatility exposure. And so when their Vegas decline, as they normally do, they decay over time, then that will translate into deltas, and the measurement of that is VANA. So our VANA calculations are a leading indicator on a swing basis. We see moves that happen about 2 to 6 weeks in advance based on implied volatility moves. Over these past several weeks, we have had more exciting kind of VANA movements because implied volatility has been going kind of crazy, right? So that's kind of the short story of what we see. So I'm going to kind of start from a VANA standpoint and show how we saw 5680 as a critical area, and now I guess 5675 we've closed there, and so it's undetermined whether we're gonna the jury's still out. We still have a war to fight.
And I'm going to show you how I came up with 5676.16 before we moved down to 5553.10, and it's totally unrelated to your tool. So that's why I'm also very curious how my system compares, because I'm just very curious. Okay, so go ahead.
Yeah. So the first thing I'm going to call out is this widget right here. So as you can see, our platform is widget based. You can manipulate a lot of Greeks, puts and calls only, stuff like that. This is a historical look at what the aggregate VANA was for SPX going back 6 months. Now, of course, this a little bit has to do with vol regimes and stuff, but if I don't have it plotted on here, but as you see VANA increasing, not too long thereafter, you see the market increasing. As you see VANA coming down, and not too long thereafter, the market comes down. So, and the average here is about 7.1 billion. If we stay in that zone, like right here, then you'll probably see market kind of just staying still, right? Not going too far. This is a good time for your short gamma, or a little bit after this time would be a good time for your short gamma move, right? All right. So right now, what we're seeing here toward now is an aggregate VANA that is positive and at or above average, right? And this increase right here kind of showed me, after a decrease back here, this increase showed me that we were going to bounce eventually. I mean, I didn't think we'd hit 55.10 or whatever we hit. I thought it would kind of stop at around 5,700, 5,650. But then from there, I figured we were going to bounce. There's a lot of puts getting bought and a lot of support in the market from dealer hedging. So this is kind of just where to start. And you see, if I go here to puts only, these green bars here represent puts that are out of the money that are short for the dealers, hence customers buying puts, buying their hedges. And so when you see these green bars here, as implied volatility comes down, which is normally what it does, the dealers' deltas are reduced. Dealers have a lot of positive deltas that they have negative hedges against, and those negative hedges get unwound slowly as time goes on when you see these green bars right here. Do you understand that? Samantha, am I following? Okay, good.
Yes,
so
yes,
that's in a nutshell. That's how to use this, right? And these levels right here, 5650 and then 5680, which I'll show you on a gamma level, because at the price, when you're on the money, see right here, this very large gamma area right here, which was a sold call, is 5675 and 5680. This is starting to be kind of a resistance, and if you blow past that, then you would be able to kind of accelerate up to 5900 pretty quickly, actually. So, and this on the gamma, because VANA at the money is always 0. We could talk a little bit. I mean, you could go on my YouTube channel. I could talk a little bit about VANA and how it behaves, how it flips sign as price goes next to it, and why. So it might be a little bit too quanty for this.
But no, some will understand this very, very quickly. They're in this world. But how do most of those who are using this, kind of looking at the prices also on this. You got some institutional purposes. Are they playing the same 2 to 6 week time frame using mostly futures, options on equities? How do you think most are kind of leveraging this data?
So I think a lot of this data, we have some institutions, we have some retail people, and really this data can be used on a 0 DTE basis. We have 0 DTE charm. Well, now 0 DTE is off, so I have to manually do this. But we have some 0 DTE applications. But typically, the largest impact is time on 0 DTE because time's ticking, right? So when we have some 0 DTE applications, a lot of retail likes to use it for 0 DTE, but you would need quicker updates, which we usually suggest for people because our pricing is high, but it's mainly because we have to ingest all this stuff really fast, right? I guess now I think we're averaging almost 60 million options traded every day, and we're consuming them all. So what I always suggest to retail who like 0 DTE, and that's primarily how retail uses it, is get to know, just join basic. We have historicals on here that are applied every half hour. You can get to, learn how to read it, look at how the market acts at certain times in certain regimes on 0 DTE. We have an educational YouTube and an LMS coming out soon on Voland, learning management system, and that will help you learn. We're trying to speed up the learning curve here. It's novel.
Okay, so how do you use this for your fund as it relates to, because you're an RIA, you manage money,
Yep.
You're using your own tools.
Yep.
So you've cooked up your own recipe, you're applying it, you're eating your own food.
Right.
How do you use this in placing your trades for your fund?
So we have 3 separate strategies in my fund. The one that I manage, and it's the one that I feel most comfortable with, is I like to do swing trades around 2 to 6 weeks.
We talked about
And
that.
I use primarily options. So I do like option structures, butterflies, delta butterflies, I call them, which is just kind of like a butterfly, but not centered. Calendars, verticals, both short gamma and long gamma. It's mostly discretionary based on Voland data. Our second strategy is we do have a 0 DTE strategy where our trader combines the use of order flow and Voland. And the way he uses it, because Voland shows you where dealers have to act, whether positive or negatively, he uses it to forecast what will happen on the order flow. And that's how he trades. And he's very successful. He's very good at it. And our third, which is actually a fan of yours, Samantha, our third trader does individual equity swing trading. So she's also kind of like a 2 to 6 weeks, but she does it on the individual equities. I am pretty much on SPX. And yeah, so we've actually, the fund is pretty new. We've just started, but year to date, we are, I'm sorry.
You're not focused on futures, long story short.
Our 0 DTE trader trades exclusively futures on ES using SPX here. We are releasing futures in Voland. We're kind of rolling it out right now. We have just the end of month options. We are trying to get the data flows from CME to get all the interim, and then we'll start advertising it stronger.
I know it's a new fund and everything, but I did want to hear that. You were about to talk about returns. Apologies for interrupting.
No, it's fine. Our returns right now, year to date, are 2.16% positive. And
with an S&P that's down 10%, NASDAQ down 15%. So very nice.
Yeah, right now S&P is down 5.1 and our Sharpe ratio is 2.2 right now. So we are, again, with an S&P that's down, I guess now like 5.5%, 6% from its highs. So, and it's like about 3% for the year. We've, our fund, it's new, but we're doing really well. We're actually very excited about how our fund has gone. And that's all unlevered too. We were just testing and making sure that we, before we levered up, that we got all the risks and, exposed all the risks, and the market helped us out with that.
It's fascinating. Obviously, you've got tools, you've got a fund. I know you do a newsletter as well. And you had actually brought me in. We were talking a little bit more of the macro backdrop. So for those who are joining, looking for a summary here on Fed Day, not that you care, Jason.
Oh, no, I care. But
it is kind of market moving in the interim. see how the end of the week goes, but that's what I wanted to talk with you about. So the decisions around how the dealers are going to react to a hawkish or a dovish Fed, and came in as expected, no cuts, but the SEP, which is the forward dot plot, came in really as expected. No additional rate cuts need to be pulled out, even if the betting market is that there will be more cuts. Anyway, long story short, the biggest kind of change was their downgrade in economic growth and their bullish backdrop for inflation because of tariffs and trade wars. So it's kind of a mixed bet as it relates to, we had that kind of reflexive bounce, and then we sold off toward the end, and we filled some gaps on the hourly, which basically had been made 2 days ago. So we're really just flat with 2 days ago. But folks get excited because it starts to move aggressively. My observation, since I run a live trading room in the morning, and then I do the 2 to 3 during the FOMC release and the Powell presser at 2:30, is that even though the market was bouncing into that level that I had just, given before we roll over, my humble opinion, gold wasn't buying it. It was very firm. Dollar yields down, dollar yen down. So it was very much, they didn't believe it. Long story short, this is such a big deal for the Fed to taper their quantitative tightening. They didn't announce a pause, which would have been very bullish, with a lot of follow through. 5 billion tapering, but they did announce tapering. That was the dovish part, even though the rest kind of stayed the same. And the fact that they're really looking at economic hit or concerns, not just uncertainty, but literally downgrading economic growth. So that all came together for this, what would have normally been, oh, well, they're doing a tapering of QT. They must not be really confident about the economy. The market should sell off. And that's exactly how yields responded with gold moving higher, but it didn't matter. Dollar yen falling, which has been very bearish equities, didn't matter because this reflexive move for Fed today was bullish into that 56.80, which you had given Monday morning. What do you see now for Friday? Because typically the more durable move happens after today's Fed day. So tomorrow we get jobless claims, 8:30 in the morning, and they've been starting to tick higher, even if unemployment is only at 4.1%. But after that, we tend to get Friday shenanigans with OPEX, and then the quarterly is a big quarterly roll. Show us what you've got for those 2 dates in particular, Friday and then quarterly end with the JP Morgan caller, etc.
Yeah, sure. So the first thing to note is I do care about the fundamentals, but the way I look at things is almost more like a game theory kind of thing. It's more about what do people expect to happen, because the Fed has actually been pretty good at communicating what will happen, but what do people expect? How are people positioned? And then what are the results of what something like FOMC would do to the market overall? And if people are positioned with a lot of puts and they're buying, they're hedging, I kind of always say hedging is bullish, selling is bearish. And so when people are hedging and then the dealers apply their hedges, so there's a long portfolio that have puts bought on it. And when customers hedge, they can both buy more, because they can lever up if they hedge like that. Especially if you have portfolio margin, which all the big customers do, right? Or they can just kind of save their portfolio going down. And I think when the market started correcting, they were just saving their portfolio. Now the dealers have a lot of these negative hedges on, right? Because they are positive deltas, and they have a lot of these negative hedges using ES futures. That's going to have to scale down as implied volatility comes down. The implied volatility of an expired option is always 0. So it always has to kind of come down, and that's how the dealers are going to hedge their book. As long as we kind of stay above this 56.75, 56.80 kind of area, those hedges are going to come down very quickly. Or if we drop down to 56.50, they're going to have to actually sell more to hedge. So we are sitting right now, right on the tip of the triangle. And I think you're saying that we're going to tip bearish. Some people are saying we're going to tip bullish. We'll see which way we go now, because the way that the market closed pretty much right on where I saw our big Vanna node kind of, tomorrow can get a little bit whipsaw, especially in the pre-market. We could see some big green and some big red all at the same time. And so we're going to have to see which way we tip from here. What I see here, this is tomorrow's execution. Well, I guess this is next week. This is next week's. Let me include tomorrow, because tomorrow is mostly done. But a lot of the big OPEX moves are actually like Monday to Wednesday and then after OPEX. But let me let me include the specific date range for just this next week so that everybody can.
Yeah, not everyone is a 0 DTE. And honestly, if you look at the levels, we're right back to where we were Tuesday. I mean, we have gone nowhere fast for a solid week. How do you trade this when we're just in this kind of chop zone? And as you mentioned, the hedges right above that, what'd you say? What was it?
56.50 is a big one. Yeah, this is.
Oh, sorry about that, guys. I think StreamYards have finally given up. Hold on.
Introducing the three-part option.
Happen, but what do people expect? How are people positioned? And then
which you had given Monday morning. What do you see now for Friday? Because typically the more durable move happens after today's Fed day. So tomorrow we get jobless claims. 8:30 in the morning, and they've been starting to tick higher, even if unemployment is only at 4.1%. But after that, we tend to get Friday shenanigans with OPEX, and then the quarterly is a big quarterly roll. Show us what you've got for those two dates in particular, Friday and then quarterly end with the JP Morgan caller, etc.
Yeah, sure. So the first thing to note is I do care about the fundamentals, but the way I look at things is almost more like a game theory kind of thing. It's more about what do people expect to happen, because the Fed has actually been pretty good at communicating what will happen, but what do people expect? How are people positioned? And then what are the results of what something like FOMC would do to the market overall? And if people are positioned with a lot of puts and they're buying, they're hedging, I kind of always say hedging is bullish, selling is bearish. And so when people are hedging and then the dealers apply their hedges, so there's a long portfolio that have puts bought on it. And when customers hedge, they can both buy more, because they can lever up if they hedge like that. Especially if you have portfolio margin, which all the big customers do, right? Or they can just kind of save their portfolio going down. And I think when the market started correcting, they were just saving their portfolio. Now the dealers have a lot of these negative hedges on, right? Because they are positive deltas and they have a lot of these negative hedges using ES futures. That's going to have to scale down as implied volatility comes down. The implied volatility of an expired option is always 0. So it always has to kind of come down, and that's how the dealers are going to hedge their book. As long as we kind of stay above this 56.75, 56.80 kind of area, those hedges are going to come down very quickly. Or if we drop down to 56.50, they're going to have to actually sell more to hedge. So we are sitting right now, right on the tip of the triangle. And I think you're saying that we're going to tip bearish. Some people are saying we're going to tip bullish. We'll see which way we go now, because the way that the market closed pretty much right on where I saw our big Vanna node kind of, tomorrow can get a little bit whipsaw, especially in the pre-market. We could see some big green and some big red all at the same time. And so we're going to have to see which way we tip from here. What I see here, this is tomorrow's execution. Well, I guess this is next week. This is next week's. Let me include tomorrow, because tomorrow is mostly done. But a lot of the big OPEX moves are actually like Monday to Wednesday and then after OPEX. But let me include the specific date range for just this next week so that everybody can.
Yeah, not everyone is a 0 DTE. And honestly, if you look at the levels, we're right back to where we were Tuesday. I mean, we have gone nowhere fast for a solid week. How do you trade this when we're just in this kind of chop zone? And as you mentioned, the hedges right above that, what'd you say? What was it?
56.50 is a big one. Yeah, this is basically, you could kind of almost look at this as a mountain to climb, right? This is the cumulative Vanna, and this requires a mountain. Now, implied volatility will come down tomorrow, right? Because OPEX implied volatility is going to come down. So as long as this is positive net, which it is right now of about 1.5 billion in notional in SPX, we will probably see a small march to the upside. We see 5,700 here as a little bit of a resistance, but if we can get over that, we can slide pretty high. So the way I would play this is down here is very supportive. Unless we see implied volatility explode, especially next week, I could sell sell some put verticals up here, or when I have a forecast like yours, where you're going to say we're going to head down, I would put on a Delta Butterfly somewhere in this 57.25 area, maybe about 50 wide ending next week. You know, that's the term that you want to trade. And if we're going to look at the next 30 days, which is usually what I look at when I'm putting on new positions, right here, a lot of this we just saw is over the next week. So after the next week, then we might be able to see your bearish drop, because a lot of these puts are going to come off. So that's when it becomes more acute, more possible. I was kind of saying that the JPM collar, like it's 61.65, that would have been the maximum at the end of the month. Don't think we'll reach that high. We'll probably not close anywhere near the collar unless we see a runaway, bullish track. But you can see here, even 61.65, I have to zoom in to see that strike right now, right? It's not going to have as much of an impact as it usually does. So
how about the
see,
lower
like everybody
put spread though? The lower put spread, which is
the
what,
lower
55?
put spread is 55.65, right?
Yeah.
That's right here. So if we pass 55.65 or we get down to there, that is not going to be it's not going to be as much of a magnet. We're either going to pass it and shoot way down, or it's going to act as support, and we're not going to get if it does approach it, it'll bounce very quickly. So that's why I say, like, I would sell kind of put verticals, and if I'm threatened, like maybe 5,500, like you want to leave quite a bit of room here. 5,500, 5,450, something like that for the end of March, or even maybe a little afterward that you plan on pulling off. That might be good, but definitely, especially with Samantha's forecast that, her cross market indicators are saying that we could head down really quickly through a different liquidity source. Remember, this is just dealers and customers. If we do realize that and we're not going to shoot up, I would do a Delta Butterfly up here, only because it's a lot less risk on your portfolio. Only apply maybe 0.5% of your portfolio, 50 bips of your portfolio on something like that, and it would return 2 to 3%. So that would be my strategy if I were applying new positions on now, which I'm not. I have my April positioning. It's kind of a Franken spread a little bit, but I have my April positioning that's kind of saying we could go up, but I would actually make a little bit of money if we head down. I would make a lot of money if we head up. That's kind of, and as long as we don't head up to like 62, 6,300, that's where my risk is. That's the risk I'm willing to accept.
By what date? Your 6,200 outlier event?
April expiration.
Okay. All right. So a little ways out. We have a question. Let me just ask if there is anyone who wants to hit us up. Definitely let us know. I've got Joe saying, do you guys go over the ODTE levels, obviously 0 DTE, on a daily basis for the ES, number one. And two is, Jason, wow, impressive. How do you capture dark pool data?
Okay, so really quick, the first question. Every day I post on my Discord page 0 DTE updates. So kind of like 2 to 3 times a day. If it's like calm, it'll be like two times. Or if it's wild, it'll be like 4 or 5 times. I will post a 0 DTE update, and you can even get that in your text messages. So you can get a text message of my update. So if you're looking at your trading window and you get buzzed, you could see, all right, this is what I'm seeing, Wizard of Ops or whatever. You can see what I'm seeing. So yes, we give 0 DTE updates, and this updates in our live version of our platform every 5 minutes. This paradigm here, you kind of have to do, it's a little bit of our Volland lexicon, but it gives you kind of a outlook on what the options look like for 0 DTE. We also have a liquidity indicator based on the dealer spread between fair value and execution price. The wider that spread is, the more illiquid markets are, at least for the options market. But that does permeate through all the other markets. When it's illiquid in one, it's illiquid everywhere. This is the level of data that we have. What was the second question?
How do you get your dark pool data? How do you capture dark pool data? I'm assuming it's more than just the SPX of E-minis. I'm thinking it's a little bit more like equities. Do you also provide?
Yes. So every single option trade that's executed is in the Oprah database. It is not, it doesn't matter whether it's live or it lit or dark market. If there is, if you go on your Robinhood account and there's a PFOF, a payment for order flow transaction on your option, it is reported to Oprah, okay? Over-the-counter derivatives is a separate issue, but dark pool, which is just off-exchange transactions, do have to be reported to the Option Pricing Regulatory Authority, OPRA. So that is a requirement, so the dark pool data is included in.
All right, and a question. It says lots of dark pool flows around 5120, 5150-ish. Would you agree? What are the odds we undercut, this is obviously in time, not today, to 4850, which, by the way, I do see as a major, massive support area if we were to get down there. Much of retail that has been buying hard this dip will be margin called, not to mention, other firms. So basically, you got a very bearish outlook here. Do you see the dark pool flows all the way down to 5120, 48?
Oh yeah, I mean we see everything down to that level. I'll bring up that, and I will go to relative values, all expirations. So these are the deltas that we. Oh, that's calls only. Hold on, and puts and calls. So this is our delta kind of outlook. So this will give you the delta positioning for right now. It's dealers, but it will, all you have to do is kind of flip it in your mind to see customers. And we see a lot of hedging here at 5650. You're looking at 5100, you said, this is actually a pretty strong delta for that far out of the money. That's probably puts
He's saying
that far out of the money.
Anonymous is saying 5120, 5150. So this is something that is obviously visible outside. In other words. Okay, so you're seeing that as also a solid support area. Anything below?
Yeah. I mean, this right here, 4,000 is actually it's a forwards trade, a little bit complex, but it's meant to capture, this is puts and calls on the same strike, and it is meant to capture the interest rate on the market. So you kind of have to discount this a little bit. Typically, if we were to fall beneath, like say this level here, 5,600, 5,500, believe it or not, institutions panic too. And we will start seeing a lot of these grow, not just because the deltas are increasing from gamma, but we would start to see a lot of puts bought, especially I think if we go below 5,500 right here.
So we're not there yet, long story short. For example, if I look at my technical analysis, I see massive support at 52 up in your radar for dark technical analysis. I see massive support at 5265. So I don't know if that comes up in your radar for dark pool activity, but that would be a level that I think would get bought with both hands. Do you see anything down in that level? Should we, get there, let's say sometime in Q2?
In Q2, right now, typically when options are applied, when hedges are applied, there are several institutions. Some of them do it annually, and that would be in December timeframe where those options are. They're not going to have as much of an impact right now. Some are quarterly, like the JPM column, sometimes at the end of the quarter and sometimes at OPEX. So right now, the April roll is a little bit bearish, but not very bearish, right? And by the end of March, it'll probably, or bearish.
Oh, sorry guys. Yeah, StreamYard's still cracking out here. Hold on. Let's see.
This very much. If we were not very bearish, when options are applied, when hedges are applied, there are several institutions. Some of them do it annually, and that would be in December timeframe where those options are. They're not going to have as much of an impact right now. Some are quarterly, like the JPM column, sometimes at the end of the quarter and sometimes at OPEX. So right now, the April roll is a little bit bearish, but not very bearish, right? And by the end of March, it'll probably, or bearish, a little bit stronger bearish. So what we see are flows. We don't use technical analysis very much. If we were to get below 5,500 and prices of puts were to get very, very high, your level is probably a logical level where they would start buying puts and start seeing support between 5,200 and 5,300. That is a little bit game theory-ish, a little bit speculative, but that's what I would see. That's what I would want to see to support like a 5,265 bottom in Q2.
Do you track the VIX activity closely? I know you can, but do you?
Yeah, so first of all, we do have our own VIX calculation that we use the CBOE calculation, but we apply it to every single equity we have. So, VIX, as you know, is just SPX, but if you wanted to know what the VIX is of Meta or Tesla or something like that, all you have to do, we have a statistic here. We track that for all of them. Here, we'll see Tesla. The Tesla VIX is 77.6. It's a little bit more than SPX. What we do is we're a little bit more, I don't want to say quanti, but we're kind of what we pay attention to.
Jason.
We're very quanti. Okay. But we pay attention to spot vol correlation. That is the core of what the dealer hedging, when VIX goes up and SPX goes down, this is the expectation from the dealers and how they price the ratio of that correlation. You can see this is the daily change. On the x-axis is the daily change of SPX, and on the y-axis is the daily VIX point change. So you can see it's very correlated. It's not random when VIX goes up and SPX comes down. It's inversely correlated. The thesis was that this is because VIX is, people are buying more puts as price is going down, and people are, selling calls or something as price is going up. And we found that it's mainly based on dealer Vega exposure is what causes this. What we pay attention to is VIX overreacting to this relationship, or is VIX underreacting to this relationship? And if it's overreacting, that means liquidity is bad and a lot of participants are buying puts, which is a hedging activity. And we have a study which says that if you over VIX, which is 2 points above the implied slope here, 2 points above that, if you over VIX, we will return to the day before's closing value within 3 weeks. That signal has succeeded 18 out of 19 times since 2013.
Good odds.
Yeah, it works out very well. And we over VIXed on March 10th, which means that 5770 is the target, because that was the day before. So we over VIXed on Monday. We should hit 5770 by the end of March. Or we have another fail. We have a second failed signal.
So by
it is
end
a weak
of March,
signal, but still we can
so
by end of March
5770 between now and
5770
then,
again.
but it could be at any day. You don't
That's right.
care as long as it tags, and then it could reverse.
That's correct. And sometimes it tags, and it is SPX, so it does have to tag during market hours. That's the way the study was.
I love that. Regular trading hours really, for me too. It's like if it doesn't, after or pre, I'm like, give it a time. It isn't a question of if, it's just when. It has to hit RTH. So we're in agreement there. A question, what sectors do you see most flows? Do you actually track sector rotation, growth versus value, for example? Someone's asking on a relative basis. Energy seems interesting, lots of bearish flow. Talk about oil. What about consumer discretionary? In other words, how do you identify sector rotation for use in, I have my own system for growth value for sure, but as it relates to your quant tools. And what about Mag 7 that have become more the Mag 7 lately, which is that what I love about growth value rotation for me, this is the cat's meow, because those Mag 7 plays are beautiful layups short when we get a rotation into defensives. And when we get a rotation into, let's call it low vol, the high beta stocks that have been selling off, and low beta has been absolutely rallying. So you get a 14% pullback a few days ago in high beta, and a plus 2% in low. That's just a gorgeous setup for short at will, the growth plays. But now they're bottoming. Now they don't have the same type of, in other words, a lot of their rotation has already kind of been unwound, and now they're trying to catch their breath. So how do you find that rotation in your tools?
So a lot of what we do, we focus completely on like what the options outlook is, but there are a lot of institutions that focus on rotations, and they buy options speculatively in order to identify those rotations. So, I mean, if somebody said something about utilities, was that, or this is oil?
No, consumer discretionary, oil, basically, if you see any flows into sectors when you're getting this type of concentration risk find.
Yeah, I mean, out of our 240 tickers, we picked those tickers based on option flow. So, I mean, if there's a lot of option flow, because that's when we can indicate our best best. Mag 7, top 7 stocks, right?
Yeah,
That's, you know, when the Mag 7 options are the top 7 stocks. Other than Tesla tends to have a mind of its own. There's a lot of in and out every day in Tesla. I don't want to say manipulation because that's kind of a dirty word, but there's a lot of intraday trading. How's that in Tesla to try to, you know, and you can almost see it in Voland if you have a, you know, the live subscription, you can see it going up and going down and going, you know, you can see Tesla following the options flow. But, you know, when you see something like oil, you know, you would kind of have to put side by side. You could put the oil charts right next to whatever other chart you were looking at, you know, natural gas or something.
XLE or most likely.
XLE, yeah. Let me see.
Another one
XLE, I think has.
Yeah, the XLE is very liquid. Also, another one about XHB, which is home builders. With if you kind of show those two sectors.
I don't know if that's XHB is in there. No. Yeah, we'd have to. I mean, here's the next thing. We consume every
XLF. Use one of those. XLF, XLE.
Oh, XLF definitely we have. Hold on. That's financials, right?
Yep.
Yeah. So right now with financials, what we see, this is puts and calls and Vanna. Oh, that's interesting. So they are hedging pretty heavily. Oh no, it's XLF 49.56 right now? Or did they just go through
49.56 sounds good. Yep.
There we go. Yeah. So right now what we have on XLF is, so this is interesting. They are selling calls to hedge their books. So this is usually done to capture an interest rate that is inherent in the options. People don't want to buy puts because they don't want to be negative carry. They want to be positive carry. So they sell calls. What that does is it does kind of drag the market up a little bit. But if there is any negative catalyst, you know, any bank related thing, it's going down and it's going down hard. We saw that in February, right before the February OPEX. We saw nobody was buying puts. Puts were so underpriced to the point where people started saying we were selling puts, and they weren't selling puts, but nobody was buying them. So they were so underpriced that you know, it left the door wide open for a drop. And we were in the money calls, you know, we were, you know, here on XLF, it would be the equivalent of being up here in like the 53 range. That's where we were located. And we knew that as soon as February OPEX came off, we were in deep danger, even if it didn't happen like right the day after, even though it did.
When did you see this? Because it just so happens that I run a live trading room, right? So literally on March 3rd, I saw a massive 52 by 50 put spread come in for March expiry. So we hit that and it was down to 50, like within a New York minute. It took like 2.5 days, which is unusual, but clearly they came in, they were selling calls, they were buying put spreads on March 3rd, and then it immediately started collapsing. So
what we would see,
what you saw,
what would we see, and what we would say in that when you saw like a big put spread, sold calls in order to finance it, right? If you sell off right after that transaction, what that is saying is the institution that owns that portfolio, which has to be big, the institution that owns that portfolio is hedging an existing portfolio. They are not levering up. So that is a bearish signal right away. You know, they're hedging and they're not
selling, they're hedging, not selling.
They're not buying anymore. So
correct.
You know,
what did you see with yours? That's what I'm trying to say with the XLF, because it goes back a little bit, and then you're saying right now they're still selling calls, so they're still hedging. They're not, like you said, hedging is bullish, selling is bearish. You're telling me that they're really more likely hedging than selling outright.
Yeah, they're hedging, selling calls. They're not selling XLF, but as soon as XLF has some kind of negative catalyst or something that you see, you're going to want to see puts being bought, because right now they're only small puts here.
But you also have the underlying where they could go and deal with JP Morgan directly, or Berkshire Hathaway, or Bank of America. So they could go to the Visa, MasterCard. Those are the big weightings, or the top 5. So they could actually be playing the individual as well as the ETF.
Yes. Yeah, we see a lot of dispersion as well. You can see here JPM has a lot of traffic as well. Yeah, we see a lot of dispersion in that sense too. We have Bank of America, we have JPM, we have like the big banks. They have a lot of what we see here. This is sold call, it looks like, which is bearish. You know, that's people getting too bullish, right? Yeah, so those are sold puts right there.
Where?
That's probably
at what level?
Big spread is at 230 here on JPM. I would expect the market pull back pretty quickly back to 230 here in JPM. And then if it passes 225, you're going to want to see puts getting bought. This is this is
that's
not
an
very
easy one
supportive.
though. You know why? That's the 200-day. So JP Morgan literally on 218 made its last high, and 219 rolled over, which ironically is when I started to see the breadth and the net selling come in and warned clients before we had the Friday, February 21st sell-off, and then we obviously dropped from there. But JP Morgan went all the way down to its 200-day. I mean, we're talking about a high of 280 down to a low of 224. That's a massive move in a very short period of time. So to retest the 200-day around that level that you're talking about is usual. Like it usually does that snaking action. It'll retest where it's already been. The question is, will it break?
Yep, that's the question. And right now, I would argue, yes, it would break. To sell the 230s, it would break and you would probably get some momentum. You would want to see puts getting bought. This is an aggressively bullish option, from customer standpoint, an aggressively bullish option look. We have puts getting sold and calls getting sold. So probably the way I would play this with options would be to sell call verticals, because you don't know if they're going to necessarily push it down. You don't want to be that guy who's standing on the train tracks hoping the train will stop as it gets closer. So if I sold a call vertical, it would probably be in this range right here, 255, 260, this kind of area, because this right here is strong resistance. JPM, this look right here, you have to climb up a mountain in order to go up. Yeah, I don't see it reaching like kind of this area right here. And if we do drop and we drop hard, then you would realize your full gain.
But you're talking about by April monthly expiration or April 30th? Like, what is your time frame as you're kind of sizing this up? Because time frame matters. Direction matters.
I would probably do this. Yeah, I'd probably do this for the April OPEX, only because that's good timing. Kind of, you're going to get a lot of premium. And if we do drop and we drop hard, you're going to realize all that premium pretty quickly. And you could just, I like to say, you always have to pay your lunch money, because you never know if you're going to bounce and start violating bad things. So pay your lunch money, but, go have a steak. Yeah.
So the views right now, because again, when we were talking Monday morning, it was, a bigger picture of macro, why bullish, why bearish. We've sold off a lot, and yet we still have the April 2nd reciprocal tariffs that are to be deployed. Some people don't think they're going to happen. I personally do. They might be pushed out, but for right now, do you see any concentration around that April 2nd implementation date of Trump's tariffs, reciprocal tariffs? Noteworthy about, in other words, is it sell the rumor, buy the news of tariffs? Is there, in other words, that second, is there any kind of importance around that date?
So here's what I see, and it's kind of, it's interesting, because I've been, I obviously I look at this all the time, but starting April 1st right here, I read the news too. I know, April 2nd is a big day, and it flows March 31st is a big day. So starting after March 31st, there is some hedging here, but not like a ton. And that's kind of why I think we might be, this is a little bit supportive, but if we drop, if implied volatility expands, then this can be a pretty strong downside move. But right now, I'm seeing that there is a little bit of support. If we get down below this area right here, this 5,600 area, it can run pretty quickly to 5,500, and that's when I would expect to see more support here. If I look here at just puts, I want to see if these are puts or people are buying calls. And that's interesting. So it seems like there's a lot of call buying. So in SPX, now typically call buying is not necessarily even bullish. It's maybe trying to recapture certain gains, recapture certain losses or something like that. This right here for calls is quite bearish, actually, because there's not going to be here. If you see a big negative strike right here, like we see here at 6,000, that's somebody buying calls there, a large call strike. And that's usually actually bearish. It's kind of hedging a bearish kind of outlook. Okay. So somebody probably shorted some ES and applied calls here at 6,000. We see that here too in the 5,700 region. So this is not very bullish after March 31st into April 2nd.
So this is helpful, right? So I'm an if then trying to look at where the levels that I'm looking for. I think 5,600, the E-mini in particular, is also a line in the sand with Fed liquidity. And I know that Jay, who was on that call with us Monday morning, is very focused on Fed liquidity. So we're really on this kind of critical support level, and I very much expect at least 55, 53 within the next few days next week. But after that, where to? So that's just a bounce. That's just we have to, retest. But if we take that out, then we have some lower levels to come in. And obviously the dates are end of the quarter into April 2nd. And I'm curious what your kind of the dealer customer tug of war says about positioning into the start of Q1. And so right now you're saying it does look more bearish than bullish. Long story short, keep your hedges.
Yeah, I would keep your hedges. I would not risk a ton. Like right here, the big fulcrum between, the March 30, this right here, I guess would be you said April 2nd time frame. That would be the big fulcrum here is 55.65. That's the JPM collar.
Yeah.
So this is the big area after March 31st. That's when I would want to see where we're at. I personally, what I see is, I think we do hit 57.70 kind of area before March 31st. It's only 100 points away. And that's, a week and a half, 2 weeks, I guess, of time there. I think we do hit it. Once we do hit that area, all bets are off. We can, 5,800 to the 57.70 to 5,800 area. I would want to see if we blow past that, then 6,000 is the huge strike that we saw before, right here.
Yeah.
This strike
If
right
then,
here.
But that's a big if. Okay, so that's an if then. And your time frame for that though is when?
So 57.70, 5,800 area should be before the end of March. Then once we hit that, then I would, it will probably do nothing for a little while, kind of meander between, we'd have to get past up 5,800 in order to get really bullish. But if we do get past 5,800, you can get up to 5,900, but it would be a slow crawl and we'd bounce around, be a good time for a condor. And if the macro plays out, if the macro flows play out that you're saying, I would see support down here, like we hit 57.70, 5,800, and then we drop. I would see support down here at like the 5,600 and then 54.75 area, this area right here.
So you're not worried about lower than 54.75 area into the April 2nd is basically it in a nutshell. You don't see lower than that.
Yeah, I don't see lower than that, but it can come quick. Tariffs are executed and inflation expectations rage. IV will rage higher, right? Because you'll see bonds starting to go. All the markets will start to get illiquid. For me, the way I trade, if we get down to this area and we get south of 54.75, I would start to look for bullish, hints or macro things. I won't trade it right away, but once I see like kind of a little bit of a bullish turn, even in liquidity, if the Fed does something, whatever, then I'll say, okay, now's the time, then I'll buy. I usually buy after the bounce, not before the bounce. Why catch the falling knife, right? So I'll miss like a few points or whatever, but I'll be confident if there are puts bought, I'll revisit at that point.
Super. Thank you for the outlook, Jason. I really appreciate it. So this has been very helpful. We really did do options power hour. Very little macro, but this is important because the flows absolutely matter. We've talked about it for a while. The flea on the tail of the dog, it's moving everything now. The options of the dog. So we've got the flows that are coming in, and I have a thesis, which is basically we need a macro trigger to interrupt the bullish flows. And we have had bullish flows all of 2023, 2024, especially with coordinated policy intervention, where all three legs of the table, which was Fed, Treasury, and White House, were coordinated. And the allies were also coordinated. So it was a lot easier to kind of get bullish because of this expected intervention. Now, not so much. So we have a different dynamic, but we still have the option flow and the dealer customer, like you just said, kind of tug of war of dealing with where they're coming in and really buying or not hedging, which means selling. So you have a system that you're using, and I was curious about it because we started talking about it Monday morning. So today was very, very helpful. Tell us where folks can find you, because this is new to me, right? This ball of land, and the fact that I know that you launched a fund. Congratulations. And
thank you.
You are giving us some good levels and some things to keep in mind. And of course, your tool set, which is new for us. So that's why I really appreciate you pinch hitting for Hans, but also literally you just came in like that. It was like effortless. Thank you so much. Where can folks find you, Jason?
www.vol.land is where you can find all this data. That's our dashboard. We do have a Discord room. The link is in my Twitter, Wizard of Ops. Yeah, join the Discord. We do have a free Discord room. We do have subscriber discords as well, but there is a general Discord room where you can ask questions for educational purposes. We do have a YouTube channel which has a lot of all the I was talking about with Vanna, all the Greeks, all that kind of stuff is on our YouTube channel. We have
because
education. And if you're interested in the fund,
education is very helpful, but your interpretation of this data, like some people do data really well, I do context. That's my kind of, so your context of interpreting this data is found mostly in your Discord, is that it, or mostly on your site?
So how we read the data is, you can go on the Discord and find that. On vol.land, on the landing page, we do have a white paper that's a little bit outdated now. It's like 2 years old, but
it's still very good.
Old, but it's still relevant. And we show the correlations between the data that we have here and market movement, primarily on SPX. And so you could see like there is a strong correlation between what option dealers are doing and the movement of SPX. There's videos as well on YouTube if you don't like reading.
All right.
If you like charts and stuff. So yeah.
All right. Well, this has been wonderful. Thanks for the macro to micro options power hour. Hans will be back next Wednesday. We'll definitely catch up with you again. Appreciate your insights into the end of the week, end of the month, and April 2nd.
All right, guys. So that was vol.land, VOLLAND. So it's pretty much a sales pitch for their subscription service. It's really up to you if you feel like that gives you an extra level of edge that you need to read the markets. Personally, I think that goes very far, very far. I don't think most people will benefit from it per se, but I think it's good to at least open your mind to what options the whole quant world is. It's a whole different game, very different game. And you can really go into so many rabbit holes. And yeah, very few people does that charm and Vanna stuff. And yeah, I've seen people do that. And they've discussed it with me. And I'm just like looking at them like, what are you talking about? Like they pulled out all these charts and some of them are like 3-dimensional charts. You're just looking at all these like different variables and you're going, what the hell? I can't understand anything you're saying, bro. But we might have to go into that world, eventually. So yes, so Mark Scully has this little thing, the Go Dell terminal. You see these other ones. I'm sure there's a lot of smart people there trying to make a business out of just selling you data, information. And I think most people don't really, that's essentially that's what Mark Scully admits. He's like, I don't want to trade. Okay, I want to sell tools to traders and make them do all the hard work. I'll just do the easy work where I just feed information. Information is where the money's at, not the actual trading itself. So that's another level right there. That's another level of the game itself. You don't want to be the person actually wasting time doing the trading. Trading is hard, very hard. Okay, the very few edges can be gained, honestly. But if you look at the whole charting stuff that I do, like you can make some money just doing basic stuff. It's not that hard. It really isn't. If you keep it simple, keep it relaxed, you'll make some money. You'll if you're interested in making like whole tons of money or like something where you're guaranteed of a heavy edge over other market makers, yeah, you're gonna have to do a little bit more work, probably a little bit more work, especially when you get more aggressive. All right, very aggressive with your bets. If you want to make huge bets on huge moves directionally or with volatility or something like that, you're going to have to need these type of tools, I'm guessing. Anyhow, it's just food for thought. I thought it was interesting presentation last week, even though it was a sales pitch. But you can kind of get a sense of what quantitative analysis is and how they look at the market very differently than just looking at charts. They are strategizing. They are looking at places where people are betting. They are looking at where the book is, essentially, right? Where are people placing their bets for events? They don't care what the event is. They want to strategize and say, hey, I see all these people betting this way. I want to maximize my bet against their bet. That's what it is. Okay. All right. So if you like the show and whatever, you can support by giving a donation to Porsche, right? And we got 1.3K subs still. We're still in this 1.3K area. I hope we can increase the subscription here on this channel. All right, and let's see here, Porsche, $PORSHAJAYE, and PayPal at PORSHA@jghb.info. And you can also donate at Streamlabs, streamlabs.com/theurbanlandlord. And you can email me at crack@jghb.info. All right. So let's see how much we can do here. Going into April, we're going to have to go back into the scanning stuff. We're going to have to scan for stocks. I think we're going to have to look for potential dips if they come in April. I'm not sure if they will. Maybe we're just going to go sideways, chop around a bit. Maybe the bottom was already set. But yes, we got a lot of work to do for April so that we're prepared for the May move up into June and July. Okay, guys, I'll see ya.
Feel like I should, feel like I should, feel like I should, feel like I should go. Go. Feel like I should go. Feel like I should, feel like I should, feel like I should, feel like I should go. Feel like I should go. Feel like I should, feel like I should, feel like I should, feel like I should. Feel like I should go.